Hey everybody, Crypto Stu, and in this video we're going to have a look at momentum-based indicators. So, I would say that I'm personally the type of trader that I don't use indicators very much. Um, I'm definitely not one of these types of people who have hundreds of indicators on their chart and then can't see what price is actually doing. But sometimes I will use, and Bill is exactly the same. Sometimes we will use a momentum oscillator like RSI or stochastics, or maybe even MACD or the Awesome Oscillator. These are all well known, well used indicators that again can add elements of confluence to our trade ideas. So, in TradingView, you can add these indicators. They're all free. So if I wanted to get RSI, I would just search for RSI, Relative Strength Index, and that's what you see here on the chart. And so this is an indicator that is based on a mathematical model and formula, and it has been used in many different asset classes since it has been developed. It's hugely popular. Lots of people are looking at it, and so it is worthwhile to keep half an eye on what you're seeing here. And so what this indicator is showing you is the momentum of the price essentially. So it's a calculation that is used to identify momentum, and you see this if I make this slightly bigger. You've got this purple zone, and then you've got when the indicator goes above this purple zone, it's considered overbought. And when it goes below the purple zone, it's considered oversold. And overbought and oversold can be an indication that things have moved too far in one direction and that we may expect a bit of a pullback or a reversal. But it's difficult to if you have a look. This is the ETH US dollar chart, and so just blindly taking overbought and oversold trades is probably not going to end particularly well. So we went overbought here on the ETH USD chart, and it continued from there to go up, 136%. It came back down, some momentum decreased again. As you can see, the move here is up but choppy. So there isn't the same amount of upward momentum as this one-sided price action that we see in this small area. And then in this massive run up here, so from the bottom, we've got this big momentum move, and it went overbought here. So again, we were overbought this whole time. So potentially, if you were taking a short based on the overbought signal, again, there was another 163% in the move. So if you were shorting there and you didn't have good risk management or you didn't have a stop loss, you're going to get wrecked. So it can be useful. I like using these indicators to look for areas of divergence, and I'll talk about that in a separate video. When markets are trending, they can trend in one direction for quite a long time, and it can be overbought or oversold again for a considerable amount of time. Where these indicators tend to work, if you're trading based on overbought and oversold, is when we've got more of a range bound price action. So if I was to drop down to the 4-hour chart here and look at the ETH dollar pair, you can see that the signals, particularly on the lower side, certainly here when it got oversold, we had a reversal. when it got oversold, we had a reversal, just ticked and oversold there, and then a massive spike up. So they tend to be a bit more accurate in range bound markets if you're looking for overbought and oversold. But again, I wouldn't be trading that purely based on price going above outside of this purple range. Other indicators, so stochastics, stochastic RSI is like a combination of the stochastic indicator and the RSI, and again, quite widely used. I find it more difficult to see certainly divergences with this. Again, we haven't really discussed that, but I'll talk about that more. But it's the same principle here. When price goes outside of this blue area, then price is considered overbought, and in the downside, oversold. I tend to prefer RSI to the stochastic RSI. And then there's MACD, which is an indicator that's based off of moving averages. And the MACD has these two signal lines, and then it has this histogram. So the histogram shows us momentum. So when it's green, we're seeing bullish momentum, and what we want to see is those bars getting bigger. That shows that momentum is increasing, and then when the bars start to get smaller, momentum is decreasing, and then it'll eventually shift to red bars to the downside when we start to see momentum in a bearish fashion. You can also look at the cross of these two moving averages. Some people use that as a signal to get into trades. And then these signal lines can also be used to look for divergences in the market. So those are the main ones: RSI, stochastic, and stochastic RSI, and MACD. In the next video, we'll have a look at how can we read divergences, because I think that's probably one of the more useful applications of momentum indicators, and we'll see you in that video.